do you think that the markets have gotten ahead of the fundamentals?
I think the markets are looking for the better side of this story that's been unraveling. It's really been a mixed picture with earnings, and we're only looking at the upside surprises. I think what we're ignoring is that there's negative earnings growth and a legitimate chance for an earnings recession. The good news is priced into the market. I think people think we're going to get some sort of trade deal which tones things down. But what we're forgetting is this whole trade dispute has caused tremendous uncertainty in the market. Capital expenditures are down. The PMI index still remains in a neutral zone. There are a lot of warning signs from business. The labor market is starting to slow. Hours worked, wages are peaking at this point. And I think there's enough signs out there that tells the investor, hey, we're not suggesting there is a crash. We're not suggesting there's a recession. But I wouldn't think that this is a totally rosy picture for stocks.
Does that mean the overall markets are overpriced, Mark?
Yeah, historically, when you have a forward earnings multiple greater than the average, and the average is in the high 16 range, right now we're in 17, low 17 range, the next 5 years of returns are quite muted. There's no exact timing on when you're going to begin to have a period of relative underperformance, but when markets are fully or fairly valued, the best days of the bull market are behind them. Again, it doesn't mean you can't eke out a single-digit gain in 2020 and keep your money allocated as you are now. But the best years of this market are definitely looking like they're behind us. And I think the recent activity of the past week only spells optimism.
Okay, is there any part of the market that you do like, Mark?
Well, I think you have to stay with defensives. If you think that GDP is now going to start to have a one handle and it's slowing, if you think Europe's going to remain weak, and we do, and if there's continued uncertainty, remember, people say, well, if we get a China trade deal, there's no uncertainty. Look, that China trade deal, if it happens, is going to be within 12 months of a U.S. election. So the entire 2020 cycle is going to have tremendous uncertainty, especially with some of the competing programs that we've seen. So we would stay defensive. The consumer is still relatively strong. Consumer staples have done very well. We think that real estate and healthcare and where money goes when there's uncertainty is not overpriced, and we would continue to look there.